Hi there. In this video, we will continue talking about the different types of complicated fraud, especially in the area of the financial industry. But before we start our presentation, let me make a quick recap on what I presented in the previous video. First, I try to differentiate between accidental fraudster and predator. The accidental fraudster is a person who is of middle age that might have financial needs, and this person is well recognized in the community and respected in the company, and he usually commits the fraud for the first time. If the person become expert and well organized and make collusion with other co-conspirators, then we call him predator. So the predator is very professional in fraudulent case and is able to meet the auditors and the fraud examiner and make a good coverage for what he did. Then we try to define the complicated fraud by saying the complicated fraud is a mix between legitimate and illegal activities. And this makes it harder for the fraud examiner to identify the fraud because from the outside, it might see that this transaction is legal, there is no problem, but we need to spend time to investigate if there is some aspect in this legal activity are illegal. So this is the definition of complicated fraud cases. And then I briefly presented three different types of complicated fraud. One of them is terrorist support, another one like money laundering, and the third one is drug dealer or drug trading. And we try to define briefly the money laundering. We say it's the placement of the cash, then conversion or layering of the cash, and then integration into the financial system. Today, I will continue talking about the money laundering, and we need to explain a few more items there. First of all, in moving the money, especially in the area of money laundering, we need to keep in mind the volume of the money, because usually the money laundering comes in bulks. And then the money laundering is usually moved in a high speed before the authorities or the government find it out. The criminal takes actions to mobilize the money from one country to another, as I said, through real estate asset sale or a bulk of very expensive cars or trading in diamond and jewelry, very expensive item, and then speed it up to move it to another place. And here we talked about the venue, who controls the money and where the money came from. So we need to keep the three V's in mind when we talk about money laundering. A good example for money laundering transaction that is really hard to be discovered is the advance cash payment. Advance cash payment, if the person would like to buy a real estate and then he makes an advance cash payment to the owner of the real estate in form of cash, this will be a good way of hiding the cash in a legal way like buying real estate. A documentary letter of credit, this is where the buyer and the seller are protected because it comes from a bank, and the bank is a financial institution which is regulated. This is also another way of moving the money across the border, especially if this bank has multiple branches in different countries. Documentary collection, open account with EFT. All these areas, they can help in moving the money from one country to another in a very short time. One way also, which can be used by the money launderer, any business that handles a lot of cash. Good example, the Western Union is a good example. I know it is a regulated company, but I'm just trying to give you an example of a company that handles a lot of cash, like check cashers or money transmitters from one person to another, foreign exchange dealers, And it's very popular in the developing countries or the tourist area where people, they might need the currency of a different country, and the exchange dealers handle a lot of cash. A seller of money order or stored value product or traveler's checks. Those are good examples of companies that has legitimate reasons, but maybe the cash might come from illegal activity. In the US here, and I'm going to talk about it in the next video, about the reporting of cash above certain threshold, which is usually $10,000. In the United States, if the person holds more than $10,000 and doesn't disclose it, this can be considered as a criminal act if there is no reporting about the origin of this cash. So concealed on a person or in a container or conveyance, these are different ways of hiding huge amount of cash. And remember, the cash can be legitimate, so there is no problem about this one as long as we disclose. But transporting the cash without any good disclosure, this makes the issue as a money launderer. Trade-based money launderer, and this is the process by which a criminal use legitimate trade to disguise their criminal proceeds. And I give you a good example, the grocery store, or maybe casinos, or maybe insurance company, where the money launderer is using this official business, which handles a lot of cash, and every day can infuse some illegal cash to the overall sales of cash, and this way can be hiding the money laundering. Also creating a shell company in a different country and making transactions between the shell company and the money launderer in a different country, this can be a good way to disguise the cash. As I said, casinos, insurance, trusts, which handles a lot of cash from the people, bearer securities, which are companies buy and sell shares without identifying the shares to a specific owner. They buy and sell shares to whoever is bearing the shares. They call it bearer securities. Also, informal value transfer system, which can be like through different ways of handling the cash across the different countries. Virtual money is a good way of handling cash from illegal activities and cell phones. So this is money laundering and the different businesses that can be involved in money laundering, as well as providing legal business. Another complicated crime is the tax evasion, and we need to differentiate between tax evasion and tax avoidance. Tax evasion is illegal because we're trying to hide the source of cash, so we pay less tax. Tax avoiding, it means making a good plan of the income so that the income bearer goes into a lower tax brackets by distributing the income across multiple years. The tax avoidance is acceptable, but tax evasion is not acceptable. Also, filing a false claim about bankruptcy is a fraud, and buying and selling securities, as we will see in Ponzi scheme, is also one of the fraud. Those are complicated fraud, and usually they need a lot of investigation to discover them. So the IRS, which is the Internal Revenue Service that is officially responsible for collecting the taxes, has 4 divisions: wages and investment, small business, self-employed, and private companies, and they include excise taxes, also large and medium-sized companies, and finally the governmental entities. Those 4 divisions, they are responsible for collecting the taxes across the whole country, and they assess and collect it by the authority that has been granted to them by the Congress. The issue is that for small tax bearers or individuals, It might not be going under investigation, but like cash businesses, as I said, these kind of entities that handles a lot of cash might be exposed to the investigation by the IRS. Bankruptcy, as we know, that it's filed to the federal government to declare that the company is not able to pay its liabilities. If there is a legal cause for bankruptcy, then we go through the legal procedures. But if the company's ownership try to make a false claim for bankruptcy to avoid paying the due amounts to the creditors, this will be considered as bankruptcy fraud. The code chapter of the bankruptcy, chapter 1, and this is I talk about the code here by the US law. General provision, chapter 3 guidelines, rights and obligations, liquidation of assets, municipality, those are the codes that has been issued by the federal government regarding the bankruptcy. Some of those codes are covered in the corporate tax, and some of them, I cover them in advanced accounting when we talk about international companies. But in this course of forensic accounting, we don't need to go through the legal code terms, but it's good to know that the company is eligible to file for bankruptcy if there is a good cause, otherwise it will be a complicated fraud. And also there are 9 offenses here when we try to file for bankruptcy: concealing the property, so the owners of the company might hide the property so that the creditors cannot claim their money from those property; false oath or account, false declaration to the government, false proof of claims against bankruptcy state if there is a state that's going bankruptcy; receiving any material amount of property from a state, any bribery that the person might take for releasing the bankruptcy claim, transferring or concealing property in contemplation of a bankruptcy. And sometimes the management, they hide the property so that the creditors might not claim any money from those property, or they ask to sell the property to cover up the debts, destroying any documents, especially the documents of the asset ownership. This can be a big fraud. And finally, withholding documents relating to estate. So remember, the Bankruptcy Act must be justified by the real situations. Otherwise, if it's a false claim by the management or the owners, then it will be considered as a bankruptcy fraud. For the securities, this is also can be a very complicated fraud, securities fraud. And here the security analysts need to ask intelligent question when they go to provide advice to the investors. They consider what many companies do not say as they spin the story their way. And here, this is how the people, they make it. They come up with a story to deceive the investors so that they can take their money as if they traded for securities. Beware of companies that exclude critics and provide selective access to management. Those, they put a big question mark. Beware of corporate management that accentuate positive information, trying to give a good picture to the potential investors about the future of the company and about the potential income. Blame others for their company's problem. If the company doesn't acknowledge their problems and weakness, this might be a big question mark for a security fraud transaction that's going on. Attempt to intimidate you, and especially if the investor doesn't have good background in securities training, they can make some kind of intimidation. And this way, it will make the potential investor a bit afraid to investigate the matter further about the securities fraud. And good example here for the security fraud that happens back in 2008, and it was made by Bernie Madoff. And Bernie Madoff is, I'm sure we might have heard him if you don't hear about Bernie Madoff or Ponzi scheme, I encourage you to search it on Google. Bernie Madoff made a very simple scheme. Simply, he was a good man with good networking, and he tried to make use of his reputation and networking by making this sham business that provides 10% consistent income. And during that time, the banks were making a very low return on investment. So this way, most of his friends who are wealthy in the country, they give him their cash for investment on hope they get 10%. And what happened is Bernie Madoff takes the cash from the new investors to pay for the 10% profit for the old investors, which they call it the pyramid shape, where the one on the top of the pyramid is the old investors, the ones on the bottom are the new investors, where they take the cash of the new investors to pay the return for the old investors, and they continue that way. This case has been discovered back in 2008, and they call it the 65 billion Ponzi scheme. And still, until now, you can find Ponzi scheme in some kind of business. Another one is the prime bank fraud, where the banks here or the investor, they give a hope that whoever owns this bank notes will have a higher interest rate than what the bank offers. We call it prime bank, where they promise the investor that his return will be higher than the normal return that is offered by the financial institution. This is a security fraud, and it falls under security fraud scheme. Churning, where the broker will make excessive sales of securities, whether it's required by the investor or not, for the sake of getting a higher commission. We call it a churning. Unsuitable recommendation, where the broker makes incorrect recommendation for the potential investor for the sake of getting commission. Parking, where the investors, they avoid to declare any ownership for the securities. Why? To avoid the ownership reporting requirement. So they park their securities as if they don't do any trading to avoid the reporting requirement. On the other hand, some people, they take advantage of the information from their executive management position to do some kind of trading. And good example, when the CEO or the CFO get some information about the disclosure of high net income for the company, and they know that the security price will go up once these news are declared in the market, they go and buy the shares in advance. So when the share price goes up, they sell it. So we call it insider trading or front running, which means the executive management or the person who has access to the information takes one step further to trade the shares and take advantage of the information he or she has. Bucket shops, the bucket shops here, it's the broker firm and the employees, they do trading and they give advices, but they are not licensed. This is what we mean by bucket shops. Misuse or misappropriation of a customer security, where the broker doesn't make any transparent responsibility towards the investor. And finally, for the companies that are having penny or micro cap stock, sometimes the big shareholders in the market, they manipulate the market by either selling the shares they have or buying more shares so that the share price will go up. So remember, we have like the drug dealer, we have the terrorism fraud, we have money laundering, and we have securities fraud in addition to tax fraud and so on. So remember, the complicated fraud cases are very popular, and it goes among either a group of individuals or group of organization or group of institution from different countries. The next one is the mail fraud, and the mail fraud actually it's using the US mail to extend the fraud to different people. So, for example, if I made a wrong tax report and I send it by mail to the IRS, the tax return that I filled it out, it's incorrect. This is a fraud to the IRS because I'm trying to make tax evasion. But because I used the mail to send my return to the IRS, this will be a mail fraud. So mail fraud, we use the mailing post office or the US post office as a medium to transfer our fraudulent act from one to another party. Persons need only to cause the mail service to be used to facilitate the fraud act. The item sent or delivered may be transported by private or commercial carrier. The next one, the wire fraud, and the wire fraud here, it's similar to mail fraud, but we don't use the mail. We use the wire, the cable, or the radio, or the TV, and it must be associated with an interstate or foreign commerce. However, mail fraud, it could be for the local area. And these are the different types of fraud. And in the coming video, I will talk about the different acts that have been issued here in the US to fight against this complicated fraud. I hope you find this video useful, and I appreciate your comments on that. Thank you. Bye-bye.